delighted to join the Master Investor Conference. I'm Mark Child, Chairman and CEO of Condor Gold. Here's our statutory disclaimer. A copy of this will be on our website in London and Toronto. So the company's strategy is to construct and operate a mine producing 120,000 ounces of gold a year at La India project in Nicaragua, and to double our existing 2.4 million ounces of gold to 5 million ounces and demonstrate a major gold district. Here's our base case. We're a fully permitted mine. We are permitted to produce 120,000 ounces of gold a year for 7 years from 3 open pits. The 1.12 million ounces of gold that's permitted is broken down, as you can see here, 900,000 from the main La India open pit. These are really high grades at 3 grams. Mestiza, 120,000 ounces at 8.6 grams. In the America open pit, just under 100,000 at 3.8 grams. I mentioned we're developing, the site will be about 3,500 tons a day processing plant and all the associated mine site infrastructure. We have the ability to expand this to 50,000 ounces by adding underground. We've had 1.2 million of underground, yet to be permitted, but it's underneath the pit, so it's effectively permitted. And that can make us 170,000 ounces of gold a year. We've got a district play of 5 million ounces. In terms of economics, very strong. We raised cash earlier this year, and at the interims, we had $10 million of cash in the bank. With $23 an ounce in the ground, the share price has dropped off recently with the gold price, and hence that valuation. We're very low all-in sustaining cash costs at $690 an ounce. So the break even, if you like. That was done at $1,250 gold price 6 years ago. Undervalued with the TSX peer group, about 0.28 price to book value. And early cash flow potential via toll milling. There are a couple of opportunities in Nicaragua. All our resource reserve numbers are on our website in the back of this presentation in detail, but we have 2.4 million ounces of gold, half indicated, half inferred. And the indicated 675 is a probable mineral reserve. So Nicaragua is a very mining friendly jurisdiction. I sat in front of the Minister of Energy and Mines 3 weeks ago in Nicaragua, and he re-emphasized to me that the government supports the project, the minister supports the project, the ministry supports the project, and we're fully permitted. A major thing in mining, because several projects around the world are never going to be mines because they're never going to get the permits, and there's a major de-risk for us to have this. We have 3 major commercial mines in Nicaragua, and gold represents the 3rd biggest export. It's been very stable. They haven't changed the mining regime or laws for the last 15 years. I've been going to Nicaragua. There's a 3% royalty off the top and a 30% corporation tax that applies to all companies, including mining companies, and there are some capital tax allowances for importation of goods and equipment. But a very good place and a very good address to be for mining, and they realize that tourist arrivals aren't going to pick up anytime soon, and hence the big push on the mining sector, which is very underexplored. We have a low sulfidation epithermal vein system. The deposit of 2.4 million ounces is split across 7 different deposits. You can see them here. They can all be expanded along strike and down dip. And this is probably just scratching the surface, if you like. This represents less than 5% of our land package. It's a former gold mine that was mined in 1956, and no drilling at all, and they still managed to produce 500,000 ounces of gold at 13 grams. So, and we put in 60,000 meters drilling over the last several years, and we're now permitted. Here's the main pit. So you've got 1.3 million ounces of gold here. So you're looking at over $2 billion, even at 1,800 gold in the ground, in situ metal. And the top part of that, 900,000 ounces, is an open pit at $1,250 gold, and that's 90% indicated ounces and 10% inferred. And then the reserves, you can only use the tighter drill spacing of indicated ounces. So these numbers are done at a much lower gold price at $1,250. And the IRRs are respectable at 22%, and the break even is less than $700 an ounce. Here's some fantastic drill intercepts that we've got. These are the top 10 across the project, and you can see you've got 10 meters true width at 34 grams, that's over an ounce, 25 meters at 7 grams. This is the main La India pit, and you're looking at a cross section of the pit, a design pit. And that has a 10-to-1 strip ratio on it, but the very high grade of 3 grams of gold within the pit pays for that stripping. Here's what we got permitted. So the magenta area is the polygons which the government has given us, the Minister of the Environment, granted the key master environmental permit to construct and operate the mine for 10 years. The polygons are here. The main pit we got permitted a couple of years ago, and the 2 feeder pits of America and Mestiza we got permitted earlier this year in May. And so we have 1.12 million ounces of gold permitted. That excludes the underground of 1 million ounces underneath it. So that's de facto permitted. We just got to drill it down to tighter drill spacing and do the underground mine designs. And what we've been doing is buying all the land for this as a major de-risk. It's been a bit of a nightmare. We've had to deal with 70 bits of land and 50 landowners, but we've cracked the back of it. I'll come on to that. So of that 1.12 million, you then say, well, what of that can you actually get out and deliver to the processing plant? This is after mining dilution and mining recovery. This is after explosives of blowing the rock up, you lose a bit of gold. Some of it's lower grades can get blended. So we end up with, if you can see my mouse here, 8.5 million tons at 3.1 grams for 850,000 ounces of gold delivered to the processing plant out of those 3 pits. That's the sort of what we can get. And then we have about 92-93% metallurgical recovery. So you'll produce about 800,000 ounces of gold out of this. And so you can quickly see your $1.4 billion, which can come out over 7 years. And that's fully diluted head grades, as they call it in the business. So there's your number of 120,000. We can add in the underground, as I mentioned, to make that bigger, which we'll start to do out of cash flow to do that. We've looked at how do we put this up with minimum capex, and one scenario is to do a slightly smaller plant, and then do the 120 or 170 in 2 stages. And indeed, we can also get some early cash flow by toll milling, which I've mentioned. So this is high grading the 3 pits. We have 1.6 million tons we can get out at a 50% higher grade at 4.6 grams a ton, so over $300 a ton of rock. And we can get about 225,000 ounces of gold out. So that would allow a quick payback, a much quicker payback if we high grade this early on, which we would do, whichever size we put up. And on to the next part of resource extension. We can add roughly 1 million ounces just by drilling down the high-grade ore shoots and along strike. It's low-hanging fruit for us. We just got to put the drilling in, and we think there's about 20,000 meters of drilling for that, mainly on the 3 main vein sets. And in cacao, we think this is another 500,000 to 1 million ounces. This is a long section of the main pit, and you can see here on my mouse, there are 4 drill holes underneath the pit. Each of those is over 10 grams. The lower one is 10 grams. The next one's 10.7 grams, then 10.2, then 12 grams. The average width is over 8 meters. It's a nice wide fat vein for underground mining. And this is totally open, so we need to put some more drill holes in down here to see how long this goes on. Talked about a district play. We've doubled the land package over the last 3 years. We bought 11 concessions, and the India concession is in the middle where my mouse is here. But each end of these concessions, Las Cruz and Los Cerritos concessions, those old historic volcanoes there, old calderas, and they're the heat source for the gold-bearing fluids. There's a major regional fault running through this. So we think we've picked up a major gold district, which is a lot of excitement as gold's over $1,800 an ounce. This could be a major deposit. And so what we've been doing while we've been getting permits the last 3 years, and we've been buying land and we've been engineering the project, we've also been doing this multidisciplined approach to gold exploration of soil geochemistry, airborne geophysics, structural geological model, detailed geological mapping, trenching, and so on. So, and this is a structural model. So there's a lot of faults here or cracks in the Earth's surface where the gold-bearing fluids come through, and that's what the main geologists and so on are looking for. Have you got 5 million ounces? And all the telltale signs are there. Here's some valuation comparisons. One of my Canadian friends said, well, Mark, you've got over 3 grams in a pit. Now, why don't you compare those with the pits of over 1 million ounces for Canadian listed companies? And you can see we got 3.3 grams a ton material, one of the highest in the world. Of the projects that are fully permitted, that's the key, permitted to extract, and as a Condor's a real standout, and that obviously helps our economics. And we also, you can look at the discounts trading to EV to resource bases, and on the far right, you've got Condor looking pretty cheap compared with its peer group in Canada. And here's a price to NAV basis, and we're at 0.36 with the cheapest on this comparison. So just to get a re-rating to the middle there, we'll see a doubling of the current share price. So what are we up to at the moment? We've got 55 employees. We're de-risking the project and getting it shovel ready, basically, ready for construction. We've bought, 12 months ago, we had about 25% of the surface rights, all the surface land. We've now got 93%. And we just bought another piece last week. We're completing all the engineering studies to get this ready. We're fully engineering the tailings storage facility. We're now about 50% completed. That's by Tierra Group in Denver. We're fully engineering the surface water management system. That's SRK in Cardiff. Site-wide water balances we're doing with SRK in Cardiff. And we're finalizing the engineering studies on power, backup diesel, mine infrastructure layout, optimization, mine designs. We've hired 5 people recently. We've hired a hydrologist. We've hired an architect and mine planner. We've hired civil engineers locally, and a geochemist we've hired, and my former country manager, Dr. Luke English, has rejoined us as a geology consultant. So we've been putting the team together to take this through to the next level. Short term, we'll get the balance of the land. Land for us is a non-issue now. We're running the projects as if we have 100% of the land, and the balance will fall into place. And we're working with the right people to make that happen. The geotechnical drilling, we have a drill rig underway at the moment. I hope to have 2 drill rigs on site next month, i.e. December, for infill drilling on my India pit and on the Steesra open pit. We'll announce those in due course when they start to be on site. And we hope to advance the process on the processing plant and select that in the very near future and start some site preparation. So on to environmental, social, very important part for us. The proof's in the pudding, because when you get permits, the last thing you have is public hearings or public consultations with the local communities. And we had 2 of those earlier this year, and they're voting overwhelmingly for the project. And that's thanks to a huge amount of work done by our local teams. 100% of our staff's Nicaraguan, and they're all working on the project, and there's huge engagement programs. I'd encourage people to look at our environmental and social quarterly reports on our website, which are incredibly detailed and professional. Just in terms of time, I'll move forward to summarize the investment case. So we're fully permitted for 120,000 ounces of gold a year. We're going to construct and operate the mine. We can get it up to 170,000 ounces, we believe. The first case is looking to be 120. We've got district scale potential of 5 million ounces. We've got very lower quartile globally, all-in sustaining cash costs of $690 an ounce. Strong, and we're undervalued in terms of $23 an ounce in the ground, so just over 1% of the gold price, and we've got very high grade and district scale. In terms of share price, here's a 5-year chart. We've come off recently. The gold prices at the time of talking has corrected $250, so over 10%. We, like the market, have also come off on the back of that. I think that represents a great buying opportunity. We're about 40 pence today, and you can see the market capitalization of 47 million. We have about 5 million sterling in sterling, that is. We have about 5 million or so in cash at the moment. And the major shareholders, Jim Mellor and myself as directors, have 20% of the company, and we've got support from some other established shareholders. And that sums it up. On the back, I have a couple of appendices if people would like to look at them. So thank you very much for your time. Any questions, please email.